Bitcoin kind of goes through these phases of trying to, rediscover itself and find new narratives. And you start getting a bifurcation between people who are the new entrants and the existing entrants. So one of my theses about this corporate adoption is that we're actually kind of maybe seeing the initial capitalization of Bitcoin banks, right? We're seeing these very large companies with very large Bitcoin balance sheets that are all now deploying and setting themselves up, and they're trying to find ways of making the Bitcoin work. It's the arrival of the suit coiner.
Permissionless, the crypto industry's leading developer conference, is coming to Brooklyn this June 24th to the 26th. And this time, Bitcoin is showing up in a big way. That's right. With confidence in Ethereum and Solana on the decline, interest in Bitcoin development is riding high. And yet the way forward for many builders remains unclear. Layer 2s, meta protocols, soft fork upgrades. We'll be talking about the future of Bitcoin and how and if it needs to change. Of course, tickets are going fast. You can get them today at blockworks.co. We'll see you there. Hey everybody, this episode of Supply Shock is powered by Core. You're going to hear a lot more about them later in this episode, but first, a word from our sponsors.
Hold Bitcoin and earn yield. Staking Bitcoin with Core, the leading Bitcoin scaling solution, earns real yield while keeping your Bitcoin right where it is. No lending, no bridging, no wrapped assets. Just lock your Bitcoin using Bitcoin native time locks, help secure the Core network, and earn liquid Core tokens. Your Bitcoin never leaves your wallet. Still your keys, still your coins, now your yield. Ready to put your BTC to work and earn max yields? Start staking at stake.coredao.org/blockworks.
Hey everybody, Pete Rizzo, the Bitcoin historian here. On today's episode of Supply Shock, we're bringing on the founder of one of the hottest startups in Bitcoin. I'm talking about AnchorWatch. This is a product that's coming to market, an insurance product backed not only by financial giants like Lloyd's of London, but also cutting-edge Bitcoin scripting technologies. The end result is a financial product that allows you to hold your own Bitcoin while that Bitcoin is simultaneously insured. A groundbreaking product within the Bitcoin ecosystem. You most recently have seen this guest at the Up Next conference, where he spoke about institutional custodians and their interest in more advanced technical Bitcoin upgrades. Welcome to the podcast, Rob Hamilton. How are you doing?
Hey, Pete. Doing great. Thanks for having me.
Yeah, let's kick it off and just dive in with your startup. Obviously, Bitcoin kind of thought of in the crypto circles as this, stodgy digital gold that isn't evolving technically. One of the things I've always loved about AnchorWatch, it is a technical product, right? While it is an insurance product, something that's kind of a domain of these, kind of the old financial world that we see, you've kind of taken this concept and brought it to the blockchain in an innovative way.
Yeah. So there's kind of two key pillars for what AnchorWatch does. There is the custody technology infrastructure we've built, we call Trident Vault, like multi-pronged security, and then the actual financial contracts. We started AnchorWatch, my co-founder Becca and myself started AnchorWatch back in March of 2022. And the initial premise around all of it was, as Bitcoin continues to financialize and grow adoption, there was a massive gap in the market for actual insured custody. Now, most of the large custodians have what we kind of call like a marketing insurance line, where they may have, like, I think Coinbase last quarterly earnings had like $400 billion of customers' crypto they were securing, and they have a $300 million insurance policy, I believe, right? So you start getting this mismatch of the protection that's being offered to the actual kind of outlying risk.
All right. I think this is especially now that stablecoins are kind of taking off in the crypto world. There's this idea from the legacy banking ecosystem that, the FDIC, right, Federal Deposit Insurance Corporation, that, your funds are protected. In Bitcoin, it has been more of the Wild West. But you're primarily marketing not to institutions right now, but just to everyday hodlers, or is it both? Who's the target market for AnchorWatch? Obviously, I think I've told you that I'm waiting to be a customer whenever it's available to plebs like myself.
Yeah. So I guess that goes into the insurance side. So we are targeting any individual. Our minimum policy size is a $250,000 policy. But with we are a Lloyd's of London cover holder, which means that we are direct agents of Lloyd's of London. We do the underwriting, we do the distribution of the insurance product, and kind of the management of the program, which includes Trident Vault and all the technical sides. But when you get a policy from AnchorWatch, it's a Lloyd's of London policy with your name on it, tied to your Bitcoin in your vault. And we can go up to $100 million per customer. So we can do commercial, mid-sized, small businesses and individuals, just at that starting policy size of $250,000. And the cost for that insurance, kind of all in for that minimum size, you're talking somewhere in the ballpark of $1,100 to $1,600 a year, depending on your underwriting and kind of the details around your vault. So we're not at the smallest size of vaults yet, but for anyone who has a couple Bitcoin, you only need like two or three to kind of be hitting that $250,000 minimum.
Yeah, let's compare contrast, right? Because I want to get into like how this is like an innovative product in comparison to traditional insurance products. I have an insurance product. My house burns down, it floods. I have flood insurance. I need to make a claim on that. I go to my insurer, they pay me the insurance. Maybe they're using some sort of reinsurer. They're going to a bank. They're getting that money. Maybe it's created through lending. That's kind of how the stack I think works on the traditional insurance side. Here, I lose my Bitcoin keys. I have an AnchorWatch, policy. My Bitcoin's still gone. So what happens there?
Yeah. So this is actually an important jump off point of as the product exists today, it is a dollar denominated policy, right? So you have a notional dollar value tied to the amount of Bitcoin, and everything you just described on the home insurance side is directionally all the same. You would, working with us, filing a claim, and then rather than having the reinsure and the multiple steps in between, we have a relationship directly with Lloyd's of London, who is underwriting the entire program, right? So it would be what's called a syndicate. So many insurance carriers come together to kind of back our program, and they would be the ones that would be evaluating the claim, adjudicating, and distributing payment to you in the event that there is a loss.
Are you looking at whether I'm risky at all, right? Because I think insurance, like, I'm going through my car insurance right now. They're evaluating kind of who are the drivers, how old they are. Are you really just looking at the Bitcoin stack, or like how are you evaluating me to see if when my house floods, my ledger floats away, and I need to make a claim to get my dollars back? How does that work?
There's a couple main factors which are the most kind of bearing on that risk evaluation. First off, as of today, out of the box, what we can do is ensuring it within our technology solution, Trident Vault. So I'll get to that in a moment. But the other major risk factors are one, have you historically had other major losses previously? How close are your keys being co-located, right? Is a factor. And then the final one, which has been really interesting to see since we launched in January of this year, is how frequently do you intend to spend? So we actually have something we call the HODL discount. So if you're saying, hey, I'm setting up this vault, we'll do a test transaction with you, but this is my deep cold storage. I'm not going to touch it this year. You set that up in agreement with us ahead of time. We can materially make your policy cheaper because we know that you're not going to have friction and touch points trying to make that withdrawal, which allows to materially lower the cost of the insurance because the risk is less, right? And so that's an interesting thing that we're able to enforce because of our technology. So kind of talking about the thesis of Bitcoin as digital gold, one of the kind of contrarian pieces that we kind of view Bitcoin is as programmable money, right? And many of your listeners in the audience probably are familiar with things like multi-signature, right? So multi-signature actually came around in 2012. It was one of Gavin Andreessen's kind of proposal changes for pay to multi-sig. This was a really big scene pain point in that you always had all of your keys sitting on a single key, right? You have all your Bitcoin sitting on a single key, right? And so the idea that you could have a 2 of 3, a 3 of 5, or whatever have you. And I believe the original pay to multi-sig scheme went up to 15. So you could have up to 15 of 15, 1 of 15, or whatever you want.
This is pretty widely standard across cryptocurrencies these days, right? Even though it was kind of a Bitcoin innovation.
Yeah, back in 2012, it was definitely a Bitcoin innovation because this was so predating any other cryptocurrency that was out there, right? So they were, Bitcoin was the first one to kind of hit this pain point of how do we distribute keys, right? And ultimately, distributing keys is distributing risk. Now, for your audience that's more technical is familiar that Bitcoin has its more of a programming language called Bitcoin script. And we actually, in 2014, the pay to script hash soft fork came out, and there was now a way where you could actually, instead of sending your coins to a key, you would send your coins to a script hash, and that script hash could have conditions within it, right? And traditionally, most people use that for multi-sig, right? Now, Bitcoin script as a programming language, though, has over 100 opcodes that are actually functional today. We just tend to only use the few in larger distribution because there's a couple pain points around that I'll get to. Our technology, though, leverages something called Miniscript, which came out of Blockstream research of Andrew Polstra, Peter Will, and Sanket Kandahar back in around 2018, 2019. And the idea of the premise of this was, okay, we have Bitcoin as this robust programming language. The problem is most people don't want to touch it directly because there's a lot of what you could call foot guns. There's a lot of different pieces of the protocol that if you don't execute and talk to it the right way, you'll get unintended expected outcomes. So the Miniscript project was about we're going to take in the world-class experts in Bitcoin script, right? Andrew Polstra, Peter Will, and Sanket over at Blockstream and saying, we understand these characteristics. Can we kind of break these into bite-sized chunk fragments, or I like to call Lego bricks? And can you click these together to get more robust programming? So this allows you to add and statements, or statements, time locks, hash locks, and signatures in a really infinitely combinatoric way of expanding the Bitcoin scripting language to do more robust smart contracts. And the way we use this at AnchorWatch is for the length of your insurance policy, AnchorWatch is a required cosigner. We have a 2 of 3 multi-signature. You have a 2 of 3 multi-signature. 6 months into your policy, we actually make it only one of your 3 keys plus the 2 of 3 from AnchorWatch. And then there's a window at month 11 where, in the event you as the customer lost all of your keys, AnchorWatch plus our recovery partner, Coin Corner, based out of the Isle of Man, a Bitcoin only exchange who's been around for 10 years, no losses, are able to step in and return those funds back to you, which is actually more economically advantageous to you than going through a claims process, being delayed, and also having to pay a deductible. It actually economically aligns that in the event there's a total catastrophic loss on your side, we're able to step in as this policy is closing and return your coins. And then finally, when the insurance policy expires, we're leveraging time locks based on the actual, not the block height, but the calendar date time that the miners put into the blocks. So we actually can say if your policy expires on April 24th, 2026, we can actually have it be on May 7th, 2 weeks after the fact. You can step in 2026 and you'll be able to unilaterally by yourself move your coins without ever having to talk to us. So once we no longer have a contractual arrangement, they're your Bitcoin, you can go off and run with them again, which is a very different dynamic than keeping your coins at a custodian where at one point you go to redeem, you have to hope they have the keys and your Bitcoin to be able to give them back to you.
Well, when you go to insurers and talk to them about this, obviously insurance kind of sprang out of the legal system, right? It's all legal agreements. You're making this into kind of coded agreements.
Yeah.
Do they see this as insurance? Do they look at what you're saying and they say this is insurance? It's just this is insurance, what it looks like on the blockchain.
Yeah, they understand this stuff, right? So Lloyd's of London has been around since the 1600s. They're kind of the longest standing kind of reinsurance group, and it originated actually out of ship explorers like doing spice trades out of London in the 1600s, right? You would have the grizzled beard, expert sailors who would say, and they were the underwriters, right? And that's the idea of underwriting, was they would write their name underneath an agreement. And they would say, well, I'm an experienced sailor and I have done dozens of voyages. So I know you need to take this route at this route, and you don't want to go during this time of the year. And if you do X, Y, and Z and you follow all these terms, in the event that your shipwrecks, I'll come in and make you whole, right? Because you had young explorers who had their entire net worth tied in their ship. If they lost the ship, they would lose everything, right? So this encouraged more risk taking by being able to encourage people to do that. And that's kind of evolved out of the Lloyd's of London tradition to where anything that it's the largest kind of like insurance reinsurance hub in the world. I kind of call it like the New York Stock Exchange, but instead of all of the terminals trading stocks, all of the insurance carriers have desks and they're trading risk back and forth, right? And so they understand this. And what a really key piece here is that what we've been able to unlock is the initial concept of multi-signature is distributing risk because you don't have all of your keys at one place. We can actually extend that and have it across multiple organizations, across multiple stakeholders in a way that for the length of the insurance contract, what we have is we call negative control. AnchorWatch can never unilaterally move your funds. But also, for the length of your insurance policy, you cannot move the funds without us co-signing, which allows us to enforce things, like I said, the HODL discount, right? We can enforce the HODL discount because if you set up a policy up front saying, I'm never going to touch this, we can assuredly lock that down because we will not co-sign because we know that you've done the HODL discount for the length of your policy. So it materially de-risks you in the ability where you can't even touch those keys, even if you wanted to, over the course of your insurance policy.
Earn real yield on your Bitcoin by simply holding it. Trustless Bitcoin staking with Core means no lending, no bridging, no wrapping, no swapping, no new trust assumptions. Simply lock up your Bitcoin on the Bitcoin blockchain, help elect validators to secure Core, and earn your share of Core token rewards. This isn't a promise or point system. This is real, liquid, and live yield, fueled by activity on the largest Bitcoin DeFi platform. And to earn even more, multiply your rewards tenfold by dual staking Bitcoin and Core tokens, meaning your Core token rewards become the key to unlocking even greater yield. Start earning Core and put just 1% of your BTC to work. Start staking at stake.coredao.org/blockworks.
And going back to kind of the main thesis here, in terms of the getting your money back part, are you getting a Bitcoin, say I have one Bitcoin in an insurance policy, obviously that's below your $250,000
For the sake of,
minimum.
yeah, we can go with that for the sake of example, though.
Bitcoin
You have
goes
one
up to
Bitcoin at
1,000
$93,000
at the end
today.
of I'm assuming it'll be at 250,000 at the end of the year. Am I getting that Bitcoin back? Or how does that work? You're saying I'm getting dollars
Yeah,
back, but I will essentially be made whole, right?
exactly, right. In dollar terms, what we're actually working on is kind of like an exchange integration. So if you wanted to directly settle in Bitcoin, we could do that price conversion for you and just give you back the Bitcoin. That's something that we're going to have live in a couple months. Like that's not really too big of a blocker, but the policy is denominated in dollars, and this gets into an interesting regulatory framework. I'm not sure if your audience is familiar with the Fair Accounting Standards Bulletin, the FASB rules that were around at Fair
So,
Accounting.
Michael Saylor was really kind of talking about changing this, correct?
Yes, exactly. And so what that worked for publicly traded companies and kind of gap accounting is that you had to recognize Bitcoin at the lowest mark to market price that existed, even if it went higher later, as an intangible good. Insurance, it's even worse than that. So if you're an insurance carrier, the health of your insurance company is based on the health of your balance sheet, how much surplus capital you have. If you are an insurance carrier and you buy $1 million of Bitcoin, you have to write off 100 million. You have to write off the full $1 million off your balance sheet. So it's even worse than FASB. Now, this is actually an interesting market development where one of the largest buyers of MicroStrategy's convertible notes is Allianz Insurance Carrier. So they're getting the Bitcoin price exposure, but they don't have to write off 100% of the capital value because they're not holding Bitcoin, they're holding a convertible note of a publicly traded company. Right. So you start seeing these interesting ways of insurance companies beginning to get exposure. To my knowledge, the largest insurance company that's bought Bitcoin is they did it with NYDIG, Mass Mutual Life Insurance. They bought $100 million, but they're massively up on that position. But also, they're not in a rush and they have a very healthy balance sheet, so they don't need to do that cash conversion. But as it stands today, they can't recognize all of that appreciation on their balance sheet until they actually sell. So this all goes around to say that's why we are dollar denominated today, because it's not like insurance carriers are sitting on Bitcoin native stacks that they can be able to participate in that underwriting. There is a company, meanwhile, based out of Bermuda. That's the one domicile that lets you do Bitcoin denominated policies today. They do whole
Yeah,
life
life
though.
insurance policies. I was actually looking into that a bit, where essentially you'd put your Bitcoin into some contract, and there's some tax advantages
Yes.
around it. Yeah.
Yeah, and they're doing great work. Insurance is kind of bifurcated in two big chunks: health and life insurance, and property and casualty. So we're kind of on opposite ends of kind of like managing that. All this to say though that you're starting to see this like initial financialization and thinking about the custody infrastructure, because our core premise is if you're paying a custodian custody fees and something goes wrong, you'd expect a kind of relationship where you're going to be remunerated and indemnified for your losses, and that's what we're trying to bring that alignment to. That custody fee should be closer to insurance premiums, because that's kind of the relationship you're expecting. I'm going to give you my Bitcoin. I'm going to pay you a fee to make sure you keep it safe. And if something goes wrong, I want my Bitcoin still, right? And you need an insurance contract to be able to properly execute that. So that's kind of like our larger, grander vision, which was kind of done by both not taking shortcuts on the insurance side by going through all of the compliance steps and kind of the architecture and the conduct reviews required to become a Lloyd's of London cover holder. We had that direct relationship with them, and then also building out our own custody technology infrastructure side on the vault. So those kind of two is kind of a very I would say a good summary of what we've been building at AnchorWatch. If you're interested, you can hit me up and we can happy to talk about it more. Go to anchorwatch.com. The one thing I will say maybe as an interesting jump off point to like larger Bitcoin culture, not widely known, the script size limit in Taproot was removed because of Miniscript. Because the idea was that now that we have a safe programming language that can kind of compute these infinitely large arbitrary smart contracts, we already have a block size limit. So why would we want to constrain ourselves to only the standard, I think it was like 400 kilobyte transaction? We might as well let it be the full amount, because there's no reason why we going to artificially constrain someone from doing a very, very large advanced smart contract, almost like a DAO, right? Miniscript is interesting tooling for like a DAO like structure where you want to have governance on chain for how all these different spending conditions can be executed. And the idea was, well, we can actually optimize the Miniscript compiler and let more 1,000 flowers bloom if we don't artificially constrain it when we already have a constraint, which is the block size limit. So Miniscript is indirect pipeline of how we got inscription.
Well, before we switch over, I do want to ask you about this corporate adoption wave and where AnchorWatch might fit into it, because we saw Jack Mallers this week come out and essentially launch a competitor to Strategy. Strategy now has 500,000 Bitcoin and 500,000 copycats. It seems, with all these kind of companies that are adding Bitcoin to their balance sheet. So how does AnchorWatch play a role in this narrative that's forming, or with these companies? Is there a role for you to play there?
Yeah. So the first just immediate call out is insurance is a better alignment for fiduciaries, right? If you read all of the S1 prospectuses and all of the publicly like the filings for all of these companies, this is the ETFs and the strategies and the 21s of the world. There's clear disclaimers saying that a material apparent risk is that in the event that there's a hack or there's some sort of loss of keys, that all of the assets of the Bitcoin themselves could be lost, right? They have to disclose that it is true. It's something that can happen. And insurance is really that stopgap solution for understanding if you're going to be paying financial management fees, some portion of those fees should be going to making sure that if you have $100 million of Bitcoin and something goes wrong, you could be identified that
Well,
$100
well,
million.
that's the fear, right? With strategy, with their 500,000 Bitcoin, let's just say all of a sudden something happens, or what we're finding with the strategic Bitcoin reserve now, we think there's 200,000 Bitcoin in this reserve, maybe, but it maybe not, right? And so there's this world where a lot of this kind of Bitcoin demand and growth has occurred sort of off chain. Seems like your product maybe foresages some sort of world where that gets kind of more towards an equilibrium.
Yeah, I would say there's like a couple steps here because you're absolutely right. It's better like fiduciary protections and it's better just corporate governance too. It's a more secure way. Up to this point in Bitcoin, this is actually an interesting if you go take a long zoom arc of history. In Bitcoin, the only option we've ever really had before is self-insuring the risk. And what I mean by self-insuring, this is just a term of when you don't insure something. I'm going to hold the risk, and if something goes wrong, it's my fault, right? So this is where the practice of seed phrases come. Stamping backups in metal, multi-signature, right? It was this idea that I am responsible for managing my own risk, and if something goes wrong, I have to bear the loss, right? There is no bank of Bitcoin I can go to give me more Bitcoin or a reset password function to give me my coins back. So out of this practice of self-insuring, we've gotten really battle-hardened and resilient where you're not often seeing anymore just total loss of keys. I know we had that with it was either Prime Trust or Fortress Trust. I think it was Prime Trust where they had a Fireblocks instance and they just lost the keys, right? That is happening less and less often as the industry evolves and grows because we've gotten better around these backup rituals and practices, right? Um, I think that now the next option, I can't speak for certainty, but companies like Strategy don't leave all their Bitcoin at one custodian. That's
Right.
another risk.
And they did diversify, I think, recently, right? They moved some over to Anchorage as well. They established a multi-custodian relationship, if I'm
Right.
correct.
And so a multi-custodial relationship is this idea of risk distribution. I'm going to keep some at Coinbase. I'm going to keep some at Anchorage, and maybe I keep some at Bic. Right? You kind of don't put your eggs all in one basket, right? So that's kind of like the next level. The actual next layer to that, the way we view it, is risk transference, which is an insurance contract. If you are responsible for managing risk, and the correlation and performance of your company and the predictive health of your company is, will this Bitcoin be here so I can access it later? Insurance becomes a very obvious alignment and also part of just like a fiduciary alignment, especially where for us, the cost of the insurance is 40 starts at 40 basis points. You're talking at a place where if you're a very, very, very large custodian, maybe you're paying high single digits. But if you're like a small, medium sized business, you're probably paying like mid teens or maybe even 20, 25 basis points. If you can pay a little bit more, but then actually have that insurance contract on the other side of it, you are paying more, but the value you're actually getting by accessing that insurance contract way outsizes the cost in our opinion, right? So I think that's more of like that's just on the front side office though. So on the interesting side, on the front side of the office, you have people that are buying insurance. The back side of the offense is really interesting. So one of my theses about this corporate adoption is that we're actually kind of maybe seeing the initial capitalization of Bitcoin banks, right? We're seeing these very large companies with very large Bitcoin balance sheets that are all now deploying and setting themselves up, and they're trying to find ways of making the Bitcoin work. That's kind of a key distinction you could see between the strategies of the world and the 21s from Jack's announcement. Is Jack's very forward in talking about, listen, we are a Bitcoin native company, and we're going to have Bitcoin native architecture and infrastructure and putting the Bitcoin to work. Maybe the first version of that is Bitcoin backed loans. I think in a larger kind of longer arc of history, though, we could be seeing it in such a way where the native Bitcoin banks of the future, I view them more as insurance companies. And what do you need to be an insurance company? A very large capital surplus sitting on your balance sheet to underwrite risk, right? And so I find it very interesting in the longer arc of things. Insurance is also a way of doing yield on Bitcoin through a different means. Now, traditionally, yield in Bitcoin's been involving rehypothecation and lending and borrowing. The leverage you get in insurance, though, is risk distribution. You don't have all of your eggs in one basket. You don't write one single policy. You have hundreds or thousands of policies. So if a loss happens in one or two people, they're localized and that risk is distributed. This is getting more of that in more modern advanced financial architectures, Bitcoin being used as a capital asset. Ultimately, if you're going to want to we're going to hit a point in the insurance industry where we're going to hit the ceiling of how much total notional capital is willing to underwrite Bitcoin in dollars, right? Today, there's maybe only $3 billion in the world of insurance. You have property and casualty, and within that, you have specie insurance. So think of it kind of like fine art, collectibles. That's kind of the bucket that Bitcoin plays in.
Right.
Just
Is that kind of the goal for the insurance industry? Is it to insure the 21 million Bitcoin? Like, is there a world where that
well,
happens?
notionally, you can't insure all 21 million if you're doing it in Bitcoin terms because you need to have capital that is not encumbered, if that makes sense, right? You're going to need
It's
to
just
have.
sort of like insurance in a hyper Bitcoinized world.
Yeah, but you can insure, in theory, you can insure millions of Bitcoin. Like, there's no reason why you couldn't do that. This is where you get Bitcoin native yield too, because if you have a Bitcoin denominated policy, that means you're paying your premiums in Bitcoin. You have a Bitcoin underlying like reserve capital pool that's underwriting that risk. And then as the person providing that capital, you take a percentage of that premium, you run your program, pay your expenses. And at the end of the year, you look and say, okay, we've hit our forecasted for losses, and you take everything else, and that's profit that you're able to put in your pocket, right? It is not risk free capital. It is explicitly risk capital, right? Just to be clear, right? Like this is not like I'm just going to lock it away and get free 8% APY on my Bitcoin because someone's doing something off books.
You're right. You have the risk in the case of loss, right?
Exactly, right? You are the people who pay out, right? And so this is a lot of like the longer arc of how we see AnchorWatch and just kind of the insurance industry and Bitcoin evolving, which has been very gratifying looking in this kind of corporate adoption wave. I feel like we were skating to the puck where it was going 3 years ago, and we're starting to kind of see this idea of like financialization, corporate adoption of Bitcoin, and thinking about Bitcoin native infrastructure and technology and financial services. Insurance is like the big open glaring one right now that's been very massively underexplored compared to say lending or buying and selling or storage.
Well, let's go to that long arc. I know a favorite pastime discussion of mine and yours is this idea of Bitcoin cycles, right? The Bitcoin is mainstreaming, it's becoming the money of the world, but that process kind of happens in these up and down market cycles. And, I think we've talked about one of my personal theories is that, we basically see Bitcoin go through kind of market maturation cycles, right? There's ups and downs. But that some of these, they're sort of social and kind of, ideological kind of process of us in Bitcoin understanding Bitcoin, right? So we kind of maybe go into Bitcoin with some thesis, right? A few years ago in 2021, the Bitcoin community looked very different than it looked like today, right? It was very much holding your own keys to because of debanking and because of deplatforming and social media. We were out in the third world, in the developing world in El Salvador, kind of doing payments with Lightning. You think of Jack Mallers and Jack Dorsey kind of talking about Bitcoin for payments. So, there's all these kind of themes and flavors of these cycles, and we end up with this, very distinct pattern of what we thought Bitcoin was at that moment, right? I think it's very clear today that we're very far from 2021, right? The kind of things that were mainstream in Bitcoin during that time, the things that people thought were exciting are now sort of maybe disillusioned with, maybe the Lightning Network, maybe Bitcoin for payments. We talked a lot about kind of the phases of things, and there's narrative dissolution. There's sort of a fight over the narrative. I think the question that I have for you right now is, we've talked a lot about the fight of the narrative. There's been a lot of narratives that kind of could have emerged or could be emerging. But one of my theories was that eventually would kind of settle on one, right? There'd be sort of like a dominant theme to the cycle, and it does seem like corporate adoption has the most wind in its sails, right? We have now, this really was a sub theme of the 2021 market, right? Michael Saylor was doing it, but it was very much a niche thing that I don't think the culture really widely embraced, right? Michael Saylor was embraced as a figure or as championing of Bitcoin, but MicroStrategy wasn't really seen as something that would be copied. It was copied a little bit. Now it really feels like the dominant narrative that the culture is realigning. Jack Mallard is kind of moving over from Strike, which was kind of leading the payments initiative, over to a company that looks like Strategy, kind of feels like a defection, right? I think it feels like a kind of cultural movement. So, I guess the starting question is have we settled on our narrative for this bull market cycle? What are your thoughts on that?
I'd say we definitely have. When you think about it in the sense of the amount of capital that's coming in to back these narratives, we were really excited. I forgot. I mean, El Salvador, I think, has almost 5,000 Bitcoin now. Like that was a really big
Yeah, a little
culminating.
bit over about 5,100.
And I think that initial announcement may have been like 4,000, right? So they've like because they've been buying 1 Bitcoin a day for a couple years, right? So like that was like a wow, like Bitcoin really has transcended to this new narrative, and we're talking that's going to be 10% of what the 21 company is going to be starting at. right? So you're talking about like at a level of scale and capital. I agree like with the general sense of like markets and Bitcoin kind of goes through these phases of trying to, rediscover itself and find new narratives. And you start getting a bifurcation between people who are the new entrants and the existing entrants, right? In that sense of like lightning and payments, that's something that you have to be around Bitcoin for a while to kind of really fully touch, understand, and feel. That's not like that may have
Well,
been
people in
initially.
2021, it's like you may have onboarded like through a Telegram group, you may be setting up your own node or Lightning node even, and you're running it. There was kind of this whole pleb movement. And now it's like you might be onboarding Bitcoin through just buying MicroStrategy shares, right? It's like a very, very, there's a whole culture of people who have now only know Bitcoin as a, essentially an additive to their stock.
Yeah, well, I think that also just goes to Bitcoin kind of conquesting existing channels, right? Like the peer to peer, the initial, like we're talking like 2010, 2011, got kind of proliferated because you hit scale ceilings when it has to be word of mouth, right? When you get to the point where your brokerage account, and everyone has a brokerage account, or most Americans at least have a 401k or some sort of long term savings vehicle, have some sort of access to this, that is infinitely easier than setting up a parallel account at Coinbase and going and buying, right? And I got into Bitcoin in 2013, and it was, I was a technical person, so I was willing to go through those like the slings and arrows of setting up my own Coinbase account, downloading up my own Bitcoin node, and backing it up, and having a USB drive, like going through all those steps. Because one, I found it fun as a technical person. That doesn't scale though, because everyone has different experiences and backgrounds. So the sense of scale now is coming through. I can just buy the stock ticker MSTR or FBTC, the Fidelity ETF, right? And I think the ETFs kicking off in January of last year was the really first big like next pool of capital and people from a scale distribution channel to start attacking and getting their acquisition of Bitcoin through
Well,
the
I was
network.
on Nolan Bowerly the other day, and he had an analogy that I really liked, where it's like, for a long time with an internet culture, it's like you would go to an internet cafe, right? Like you would go to a cafe that was branded as being something where you could access the internet, and it was a hobbyist kind of grassroots feel. Now, if you go to a cafe and there's no internet, you're just going to go to another cafe, right? Like your social expectation is that just all cafes are internet cafes, right? And it does feel like the 20 era is over, right? That there's this kind of hobbyist kind of culture first community. It was very much a counterculture movement in 2021, right? If I think about the Bitcoin conference in 2021, you have Ross Ulbricht. This is an enemy of the state. This is someone who's locked away in prison for the rest of his life, potentially going to die in prison. You had, dissidents from Africa and places like the Human Rights Foundation talking about how they're using Bitcoin to kind of subvert these things. But Bitcoin felt very political. It felt countercultural. You had Tony Hawk kind of doing 360s on a skateboard. And today it's night and day, right? You have the orange tie, Michael Saylor wearing an orange tie. A lot of people have sort of embraced this meme. And I just think I've been struck recently just by how stark the contrast is, right?
Yeah,
I think, yeah.
it's like it's the arrival of the suit coiner, right? The suit coiner. I have that T-shirt. I haven't worn it yet. I should have brought it on the pod today, maybe. But the suit coiner phenomena, this idea that it's traditional finance, it's kind of well groomed. It's walking in and kind of talking a big financial jargon. It's not flipping over the state. I can't help but feel that some of this also is related to the just ascendance of BTC dominance, right? There's a lot of validation in what we were saying in the counterculture back then. Back in 2021, 22, to say that ETH was going to go down in Bitcoin terms, that all of this stuff is ephemeral and it's fly by night, and sure it's a casino and maybe you can make money. That thesis is starting to play out. Especially also not just seeing the market performance and maybe somewhat related, but also just not having the corporate adoption strategy. I just saw someone's trying to do a strategy equivalent for Solana, but you
Yeah,
know,
Jan Ober, I believe, is the company, and then there's Soul Strategies. I think there's a couple actually. Yeah.
yeah, but like it's also amounts of capital that are dwarfed, like, that are fractions of it, right? And in a monetary network, this is going back to like the Nakamoto Institute, like, and just kind of like early
Well, I
early
think
eras.
crypto for this cycle, I mean, their narrative is stable coins and they have nothing else. Meme coins, I think, are done. And I think that, the collapse of Ethereum as a ideological movement, I think that's really the thing that happened over the last couple of years is that, and I have a lot of respect for the early Ethereum people, right? Not because I agree with them ideologically, but I agree where they were coming from. I agree with their right to kind of experiment with things. And, when I talk to kind of old Ethereum founders, developers, like people who are part of that early culture, I don't begrudge the Ethereum attempt. I do think that ideology is kind of broken down, and there is a listlessness in that community. that's having a seismic effect, I think, on the whole crypto space right now.
Yeah, it's a massive overhang and hangover, right? I just saw there was an NFT collection. I forgot the name of it, but they weren't paying their Cloudflare fees, so now all of the pictures are gone, right? But they made hundreds of millions of dollars, right? Like it's kind of like a ghost town, and everyone's extracted so much value. Uh, this corporate adoption wave too just provides a more streamlined directional exposure to the industry, where you can just buy it through an ETF and just be done with it. I think I don't have the numbers in front of me, but the ETF outflows for ETH versus the inflows for Bitcoin also kind of speak to that story. But I think that just kind of goes to this, like, a further validation of Bitcoin succeeding, and the next stage of capital is entering it, which is through the suit coiners and financialization of stocks and ETFs. That's a whole new capital base of people who have exposure to it.
You can now earn real yield on your Bitcoin by simply holding it. The Core blockchain, Bitcoin's leading scaling solution, rewards you for keeping your Bitcoin right where it is. Here's how it works. Core is secured by a group of validators. When you lock up your BTC using Bitcoin's native time lock, you help elect validators to secure the Core network. In return, your validator earns rewards and passes them back to you. While time locked, your Bitcoin never leaves your wallets. No bridging, no lending, no counterparties. When the time lock expires, you get it back, completely untouched. Still your keys, still your coins, now your yield. Want to earn even more? Lock up Core tokens along with your BTC to unlock higher yields through dual staking. Learn more and get started at stake.coredao.org/blockworks.
I'll Steelman, because there are some remnants of the 2021 and 20 culture who are still alive and well. I'm going to call him out by name because he's a favorite of mine in the Twitter sphere, which is Predator. He's an Anon account. I've 180'd on Predator. Predator is, I think, one of my favorite accounts right now because he's been so consistent on hating pretty much everything, right? Like, I think early on I saw him as someone who was kind of cherry picking things to hate, and now what I love, I think, is he's consistently sort of hates and is disgusted with pretty much every part of this current cycle. And I think the core critique is essentially, back in 2020 and 2021, the hold your keys, keep your own custody, be your own bank kind of ideology was kind of sacrosanct, right? Like that was really the core of it. Freedom money, right? That was like, if you were to think of a refrain or a meme from that era, that was maybe it. And now, he does a lot of great work kind of posting about kind of the micro strategies and the meta plan. And this idea that Bitcoin-backed stocks aren't so different than, alternative cryptocurrencies or shitcoins or whatever you want to call them. I think this is something me and you have debated a lot. So where are we now if this is how adoption is happening? And is there something wrong or bad happening here? Because that seems to be the allegation from that set, right? Is that Bitcoin is shifting from its values. These are now Bitcoin native shitcoiners who are doing bad things to get capital, right? I think like there's a lot about that reaction that I'm sympathetic to.
Yeah, to actually just to where you started on Predator, I view him as almost like he's encased in like sap, like fossilized from, and this is not, it's not an insult.
No,
Like, no,
I agree.
it's not an insult, right? It's
No,
someone.
it takes a lot to mentally endure that amount of change, like in a culture, and to sort of persevere and say like, no, that is not how I was taught this thing, or this is not how I learned this thing. But that's why I think his account, or just, I become a lot more sympathetic to like what he's been able to bring to the cultural conversation.
I mean, I often reply usually like laying out context or different points of view. I would say Predator would be on the list of like NIMS that if I could ever meet them at a Bitcoin conference, no cameras, no microphones, and just have a beer with them.
I hope he would never attend a Bitcoin conference, because that would be beneath him to actually attend the conference.
Right, because he would be then indulging the spectacle of what Bitcoin's become. But I would love to find a local meetup. I host Nashville Bit Devs. Come on through. I'll buy you a beer. Like, I'd love to sit down and chat with him, right? Because I think he is a good faith actor in his criticisms, right? Like, he is a good faith actor. He is walking through and he's kind of mirroring back older narratives to the current discourse.
Yeah, 100% agree. Yeah,
the response and kind of the context is laying out my mental model of Bitcoin as this permissionless network, and that I actually think, if you're going, and I've talked with him about this, is that if you're threat modeling Bitcoin and you're trying to understand these new market entrants, these suit coiners, they may not be aligned with the core ethos of Bitcoin. The best thing you can do is hold your own keys and run your own node. And the actual risk is not the financialization of the paper wrapper of these Bitcoin companies. It's actually who ultimately is holding the keys and running nodes on behalf of these companies. They are economic nodes. They are holding the keys for these companies, and their ability to disproportionately affect the network in a time of tension or forking. right?
Right. Okay.
And
Yeah.
that's actually from the threat modeling I look it through is I try and understand what are better ways to be able to, democratize that ability to have your voice heard on the Bitcoin network, right? You want to be careful. Like if you're looking at all these financial wrappers, most of the custodial agreements nowadays, or the products have wrappers claiming that if there is a fork or there's a disagreement, they are the sole arbiter to kind of decide what fork to follow, right? And that becomes a massive economic thumb on the scale in a time of tension. So if you're actually red teaming and you're kind of adversarially going through the network, the thing I would be concerned about is that in a moment of disagreement, it probably would not be something like inflating the Bitcoin supply, right? It would not be something like probably a block size increase. We've already had those conversations. There would be some sort of new feature set that would be contentious in the community. And then you would instantly be able to have millions of coins enter the market to dump a competing fork that maybe had different principles, whether that's through privacy or security or what have you. Um, and they're going to be able to instantly economically act, which then impacts the mining
Yeah,
incentives, right?
I had James O'Byrne on the podcast last week, and he was talking about the rival custodians really kind of changing the network model and the threat there. I think maybe just to kind of say or just definitively before as we talk about these things, if Sucoin are the culture, what I say always about these Bitcoin narratives is that some of them come to the fore. And the new people coming in, they'll learn kind of that is Bitcoin, but the other ones don't go away, right? Like we expect Bitcoin to be used for payments eventually. It's not going to be the cycle of Bitcoin payments. That's clearly with Jack leaving a company like Strike, which was really betting heavily on consumer Bitcoin payments and retail. Bitcoin 2022, kind of announcing a big point of sale partnership. Like clearly, that's not the narrative. That doesn't mean that goes away, but that's not the narrative here. The technical stuff with kind of ordinals, layer 2 Bitcoin and things like that, do you see the way that that bridges with the corporate adoption stuff, or do you think that was too early? They'll keep kind of building and tinkering, but we're not going to see a kind of an emergence of that culture?
I think payments is something that's a higher abstracted value, and you'd probably have a lot of people from the Austrian older school generation of Bitcoin, the Nakamoto Institutes of the world, saying that you have to get store of value kind of settled first, and then medium of exchange comes later. In that Bitcoin is appreciating as a capital asset so rapidly in the comparative market of other things you can invest in for store of value. Bitcoin is the fastest horse in the race, right? With Stanley Druckenmiller's phrase, Bitcoin's the fastest horse in the race, and I think payments naturally when Bitcoin started, there wasn't a massive capital base around it. So payments were the obvious first thing to do, right? And payments are something in your Bitcoin journey you get to when you are deeper down the technical rabbit hole, especially today in a world. And I listened to that podcast with James O'Byrne last week. Back in 2012, 2013, when people were getting onboarded into Bitcoin, James said he had a buddy who met Roger Ver at DEF CON and he paid him over the phone. It's before we had Cash App. It's before we had Zelle. It's before we had all of these things that made Venmo, made all these payments so easy. The technology just, and that's also why you see the surge of stable coins, right? It's just a better natural layer. If you're going to use this kind of settlement layer, you actually don't want the Bitcoin price exposure for payments. You just want to get instant settlement, right? And the stablecoin architecture, it's one of the things I've sometimes get, some controversy around, but I say that crypto, obviously, the one use case that is undeniably of high utility and just product market fit is stablecoins, right? You
Yeah,
can't
I
look
mean,
at the adoption scale.
I mean, there's a couple freelancers that I work with on my longer Bitcoin history stuff who get paid in stable coins, and it's the delta between that. I mean, there was one guy who was up in another country, and he sent me this 2-page sheet of how to transfer to his bank, and I was like, look, here's USDC. I'm not an evangelist of USDC, but here you go. Like if you don't want to hold Bitcoin, you're going to do this research, let's get this done in under a day, because I'm not going to sit here and read this 10-page document and write all these numbers into a bank. And
You're also seeing Bitcoin products adopt both USDT and USDC. So I actually inadvertently have a USDC wallet on my phone and a USDT wallet. I have the Aqua wallet, which does
right,
Liquid, Bitcoin, and Lightning, which does USDT, and I have Lava, which does USDC. So I was at the MIT Bitcoin conference, and I picked up the tab for dinner, and people were paying me back in Bitcoin, and people were paying me back in all these different channels, and someone paid me back in USDC. And I was like, I don't have. Oh wait, I do, because I have the Lava wallet, right? It can accept USDC. So you're seeing also this just on the back end. I think I never knew the exact details, but people were talking about that Strike for a lot of its instant settlement was using Tether too. Makes sense. If you're doing instant conversion, you want to be able to remove that Forex risk. Why wouldn't you do a currency swap in real time, right? And I think it has obvious value and utility, but payments, good, take back to the original point. Payments is something that is a whole different game compared to like the capital asset accrual. And you need to have a more robust baseline financial architecture for the payment stuff to really hit the scale that everyone's looking for Bitcoin specifically, because just use stable coins
There's
otherwise if
one
you're doing
other
payments.
narrative that I feel like is subdued, but was dominant, and this is sort of the nation state kind of Trump Washington model. So that I would say these are the two kind of competing things for the main narrative left, maybe at this point, right? If we're gonna say ordinals and L2s are too early, we're gonna say payments too early. Then all we have left, I think, is corporate adoption and government adoption. And it seems like if you were to pick one of those to be more dominant, you would still choose corporate adoption. You think that is going to be the lead of the cycle?
Yeah, I think, well, just the nature of corporations versus governments. I mean, governments have more capital, but they move slower, right? So it's easier to spin up a company in a different region and start issuing convertible debt and starting to buy Bitcoin. The Meta Planets of the world, there's one in Hong Kong, right? People are trying to do it all in these different geographic regions. Like that's something that can move fast at smaller capital sizes. If the United States, when we finally get that report, if they are sitting around 200,000 Bitcoin, that's a sizable starting position, and it's also the kind of the leading world government, right? So you're going to naturally have smaller, like it's like if the
But
you're
we're all rooting for Bhutan, really, in our
Bhutan, totally. Bhutan's probably like is never going to do a disclosure though; they have no need to. But also, if you look at it in the comparative scale, this 21 company is going to have 42,000 Bitcoin. They're going to be at 25% of the U.S. government's holding out of the gate, right? And you get all private bankers and financialization, a lot easier flow of capital to go chase Bitcoin rather than going through, I think, the more politically hairy process of you're going to take tax government proceeds and buy Bitcoin instead of paying down the debt or, veterans benefits or highways or like
Well,
10,000
look,
other
I will
things from a
say
political constituency.
as someone who's watching this cycle, I think it's pretty obvious that the corporate adoption stuff is going to lead. I don't like it. I'll just be honest. I don't like it. It doesn't make me feel particularly passionate about getting into Bitcoin. It's not something that I'm very enthusiastic about. And I feel like speaking to kind of the more of the critical side of it's like, what are we doing here? Is this a good use of people's time, right? Is Jack Mallers, like, is his best use of his time accumulating Bitcoin on behalf of some shareholders, and developing a capital vehicle around that? I think that becomes a larger question of, like, it's like, what are we doing here, right? Or in the Elon Musk parlance, like, what did you get done this week? So if we can achieve something this cycle, of course, the steel man of that is that, let's just say there is large scale stock market adoption, and you have many stocks. Maybe GameStop one day will buy Bitcoin. Knock on wood. Obviously they've raised the money for it, but they seem to be kind of sitting on it and biding their time. So a world where the stock market owns a lot of Bitcoin, I get it. I get why that's appealing, right? I get why that adoption is appealing. I don't know what it does for the movement of Bitcoin, though, right?
Right. I guess it's interesting, right? Because you could view the corporate adoption strategy somewhat as an arbitrage of that Bitcoin has finally arrived, right? So now that Bitcoin has arrived, your best ROI immediately for capital is actually to just get as much Bitcoin now because the market asymmetry is disappearing and more people are buying Bitcoin, right? So if you're going to try and accumulate a capital base, you're going to do it now. All that said, I share your concern about how many of these derivative Bitcoin capital companies can exist that are all not going to marginally compete all of their unique edges away. You probably can have a couple, and then also you just have the
Well, unless
endemic
there's a
risks.
world where just every company owns it, right? It's just like,
Sure. Yeah, and like, but then you also have the endemic risks. What if keys are mismanaged? What if there's a seizing? What if there's a loss? Right, something goes wrong. Like these are all things that to be consciously aware of. That I think are also that like you maybe the Bitcoin doesn't get lost or destroyed, but you actually just have shareholders getting hosed. That's a very possible outcome, right? Like this is a
maybe let me just
new
say this way,
novel.
like the financialization piece, like, I just find, like, awkward and confusing, and I'm like very let me just say, like, I was very passionate about this idea that I think, like, getting the crypto people over to Bitcoin, right? I think that made a lot of sense. These are people who have spent a lot of their time and energy kind of working on things. Maybe they're not working out. Getting those people to come to Bitcoin and realize that Bitcoin is the ship that they have to build on, like, I feel pretty passionate about, right? I have relationships with a lot of those people. I've watched them kind of try to achieve and build things, and them kind of missing out on the Bitcoin boat because of that, I felt was, I think I had a high motivation of that. On the corporate side, I just struggle to, like, sort of, it's almost like reading Jane Austen or something. It's right. I understand that it's an interesting story. It's a good. I struggle to get like I can't get involved in this TV show, right? I don't
Totally.
know who am I rooting for here. It's like, am I rooting for Michael
Right.
Saylor? Look, I like Jack Mallers. Maybe I'm gonna buy some of his stock, like just for the lulz, because he's doing a cool thing. But like, it's like, what are the stakes here, right? Like, I don't know. It doesn't like when the Bitcoiners went to El Salvador and Bukele was kind of arriving on the scene. That the stakes was it was Bukele versus the world, right? It was Bukele versus the IMF. It was like sort of standing up amongst nations and sort of declaring that Bitcoin, was money. Even when Saylor started buying, right? He was kind of breaking from the herd. It's sort of like what's at stake here if the corporate adoption stuff comes and goes. It's nominally successful. So a lot of these companies buy, some of them sell. It's like what do we gain from this narrative? Becoming very successful, I guess would be the question that I would
Yeah,
ask.
I think it's a good question. It's also that like it's the corporate adoption and the government adoption cycle, like to your point, is kind of just like a rehashing of the Bukele narrative at more scale, right? So we're not transgressing, we're not pushing out new boundaries of the meta narratives of what Bitcoin is, right? We're just kind of expanding it and we're just adding, a couple zeros to the end of it. And just instead of it being 5,000 Bitcoin, we're talking MicroStrategy has 500,000 Bitcoin, right? So you just added 100x more, but it's the same idea. I can understand that. And I think the
Like, do I want them to beat the regular companies that like might buy Bitcoin? Like, maybe like let's just say like some of the other like a Tesla sized company got serious about it. Like, I don't know. I just don't know like what's in it for me from like a spectator sport, like Bitcoin culture.
the optimistic theory crafting, right, of like casting out like the second, third order effects of this, I think is more native Bitcoin financial services, right? In that when you have companies that have large balance sheets of Bitcoin, they're going to be expected to put that Bitcoin to work. At some point, it's not just going to be I'm going to buy and sit and hold on it, which is an interesting narrative inflection from all you do with Bitcoin is you buy it, you never sell it, don't risk it, don't do anything. The idea that in a hyper Bitcoinized world where everyone's using Bitcoin and Bitcoin becomes the numeraire, it becomes the actual capital asset, you're going to want to start thinking about things in Bitcoin returns. I think Grant Gilm from 1031 calls it like, and Odell from 1031 call it Sats flow, right? The idea that on a not just a cash flow basis are you profitable, but are you able to outcompete the returns on Bitcoin, right? And I think what you're seeing today is a quick financial derivative that's able to achieve that, right? This is the MNAV phenomenon with these shares,
Yeah,
right?
I just find the world of business very boring, right? Like that's why I wasn't interested in economics, like
Okay.
coming in, right? Like, and so
Okay, fair enough. Right, right. I'm getting excited talking about these things because I'm
yeah,
an eco
you're
math
like,
guy
oh
and a
man, like
business owner, right?
you'll have a little B on it next to these numbers, and like, oh, they're all be little B's instead of dollar
Well,
signs.
I mean,
Yeah,
is part of it too that Bitcoin becomes boring because it becomes more adopted and
I know, and
understood?
that's the shame, right? Yeah, it's like, are we out of the early age where it's exciting, and is this sort of have we made it, right? Is there no stakes kind of left, right? I don't know. Yeah.
I mean, the stakes get bigger, I think, as the capital base grows and accrues and the monetization of it, earlier holders are able to. This is something that I talk about in Bitcoin that, sometimes people debate around is that for me personally, I view Bitcoin as the means to an end. It's not the end of itself, right? And so I got back into Bitcoin in 2013 because I was a Ron Paul and the Fed guy, right? Yeah, just smaller banking, breaking the Federal Reserve as the sole issuer of the money printer, right? And something that I was and I still am very ideologically concerned about and opposed to. And that's why I like Bitcoin as a market money, right? It's no one's making you use it, right? And I think the idea of freedom of markets is a really compelling thing. For me, like I still see that narrative being played out as it's being monetized. So my original theses of one, the permissionless nature of it, of naturally free-based market money, this is what to me success looks like. And so maybe it's a little bit boring and a little less transgressive now that we're on Bloomberg all the time and CNBC and we're in the White House. I saw Frank Corva from Bitcoin Magazine was at the White House press pool, right? Like we're
Judging by Jack Maller's reaction from the Bloomberg folks, I don't know if you caught that when they asked, he joked with the guy if he was going to
buy
buy
some
Bitcoin.
Bitcoin.
He was like, no, sir. Like, I will die before I buy.
I saw that, and that's an indication of how early we are still, because you have these people, they're encased in SAP in the same way that they're thinking about Bitcoin from like 2017, 2018, and the price is 10, 20x higher than when they first
Well,
heard
there are
about it.
still Bloomberg anchors from, like back in the day, like 2011, 2012, who were, still who are still active communications, right? They still work at CNBC and Bloomberg, and it is funny to kind of see them, kind of not make a mental connection between this thing that's like still going up. Yeah, I don't know. Man. I just think like my bias towards the folks like the Predators and why I mentioned him and like that culture is as much about as I've leaned into kind of the cycles like normative tropes. It is sort of it does feel a bit alienating, right? Where it's like I don't really care about the U.S. government owning Bitcoin. Like to me, I don't. I actually thought that it was probably like a net negative for us to extend U.S. financial hegemony like into like another century. That like was kind of like not something that I was like maybe super excited about. Yeah.
For me, I'm somewhat insulated in this in that I work at a Bitcoin company and I'm doing interesting Bitcoin technical things. So I'm touching the protocol all the time. Right. So I still very much feel very much connected to the narratives of what got me into Bitcoin technically, because I'm doing these Bitcoin native smart contracts. I'm kind of thinking at ways of leveraging Bitcoin as programmable money and doing these new things, right? Like thinking through the whole kind of apparature of
Right, and
running
as
a
that,
Bitcoin
like, do you
business.
think these companies will eventually have to do that, right? So when Jack Mallers is saying like we'll do native Bitcoin financial things, is that what he's talking about?
You can't do it without holding the spot Bitcoin. Right? You're gonna have to touch the keys and move the things around at some point. They can't all be paper IOUs sitting at a ledger. And this is an interesting point. I think in the expediency of moving fast, you see like 21 and Cantor Fitzgerald use Anchorage. It's because out of the gate, they're the only to for everyone that was interested in all the technical stuff going back to
Or
like the
banking chart,
legislature.
or something?
Yeah, so they use Anchorage, and they're the only federally chartered OCC, Office of the Comptroller of the Currency, chartered custodian for crypto. Period. Is Anchorage? They are the only game in town. It was right at the end of the tail end of the Trump administration. Brian Brooks, who was running the OCC, formerly of Coinbase, kind of gave them that charter, and they are in a unique incumbency position from that. And because of that, I think also strategically, a lot of these players aren't choosing to work with Coinbase. The new Coinbase made there was an article I saw about Coinbase is openly musing about becoming a bank, and it's because I with this new kind of like this new legal landscape with the reposturing of the SEC, one for qualified custody on Thursday, April 25th. There's going to be an SEC roundtable on qualified custody rules that's going to be live streamed. I'm interested in seeing how that's going to develop. That would maybe change some of the existing architecture, but they're choosing to work with an Anchorage because they maybe see Coinbase as kind of like the big whale incumbent in the crypto custody infrastructure side, and they want to kind of work with someone else. I think they do that to move fast, right? It's faster rather than take it as someone who's built out Bitcoin custody architecture. That's not something, if you're dealing with the security of Bitcoin, you just flip on overnight, right? So Trump wins in November. The reposturing and everything starts happening. People start kind of like hitting the gas pedal to go, running these like Bitcoin financial companies. They use Anchorage because have been around for years. They're a reputable company. Like there's nothing wrong with them. But I think in the longer arc of things, they're starting with sub brokering. They're going to work with Anchorage first because they're kind of ordained from a legal perspective as the best kind of custodial vehicle. But naturally, over time, they're going to want to build out their own stuff. If you're going to be able to do these more advanced financial contracts and arrangements, you're going to want to be able to do that all natively settled in Bitcoin, and you're going to have to be able to touch the spot Bitcoin. It can't just be a strict prime brokerage where I'm going to move from account A to account B at some other company and have it all be spreadsheets. You're going to need to be able to touch that underlying spot Bitcoin. And that's kind of the Jack Mallers 21 pitch, right? Is they're a Bitcoin native company. Jack has built Strike. They do payments, but they're doing $6 billion a year in just revenue from people buying Bitcoin, right? And like that, like kind of like the buy and sell Bitcoin, like the pipes of the dollars to Bitcoin and Bitcoin to dollars. They're dealing billions of dollars of revenue in architecture, and that's all infrastructure and architecture that they own, right? So you would see that as Bitcoin continues to financialize, you're going to have to. It's kind of like in any market, like the initial trade is like it's inefficient. So the first thing you do is you just get an ETF wrapper, you get a share, you just get it somewhere. Over time, as that trade gets more and more crowded, you're going to need to have to go out on the risk curve to find new financial products. And that's going to be managing the keys and kind of the architecture yourself. Right. And so that's kind of what I view as the natural next step as this market evolves.
Well, okay. I guess like maybe if going full circle here, last question for Rob Hamilton. Is the cycle over, right? There's some people saying now that we're out of the bull market. Maybe it's over. Maybe we topped. Maybe I should have been selling Bitcoin when I was at the Michael Saylor 100K party, basking at his sort of luxury party. I should have known to take a little bit off the top. Are you still a 4-year cycle believer, or do you think that maybe the bull market came and went and this is all bear market post posturing by myself and you?
No, I think the 4-year cycle changes. This is something that my co-founder Becca and I go back and forth about. She's a very strict cycle observantist because Those are the data points that we have, and until the trend breaks, you follow the trend. Uh, I don't think this is the cycle top, to be clear. I think you're seeing there's been a little bit of market instability with Trump and tariffs and like just global trade that's kind of like shook up the markets a bit. You started to see people talking about decoupling again. For me, I think with this capital accumulation, you're running out of Bitcoin to be able to on the margin not have the price get pushed up higher and higher. I don't. If today's April 24th. If you made me guess, I'm assuming we're hitting all time highs before the end of the year. I don't think the cycle's over or washed out that way. May it be muted. Maybe we only get to like 175K, right? And people were moon mathing to 10 million. That's very possible, right? For me, I just view it in the sense of the new entrants that are coming in, the scales that they're buying. There's only going to be a couple more of these that can actually really do this at scale before you're just running out of Bitcoin at exchanges and on the free floating market to not push the price naturally higher. And these are all kind of, even though they're different companies, they're all aligned in this mission of the Bitcoin price going up. So while there may be competition between do I buy strategy or 21, they're all directionally correlated in Bitcoin price going up being good. So they're kind of helping support each other, even though there's like a friendly competition between them.
Yeah, in a way, Jack Mallers is working for Michael Saylor now. So I guess final question. We love our market top indicators. Katy Perry with the nails, the NFTs that Paris Hilton and Jimmy Fallon, show on the on SNL. What's your, if you were to kind of paint a picture of this market top, what does it look like for you?
Market top in the hype cycle is when you just start getting every random penny stock starting to just add a Bitcoin strategy, right? Right. When you see a full dilution of this accretive capital narrative where it gets so templatized. So you can also like if you're thinking about like Jimmy Fallon NFTs, like those cycle tops. What happened was at first, and you can also view this a little bit like ordinals. Like when this all started, it was really arcane. You had to go through a bunch of technical hoops, and you had to like there was almost like a proof of work involved in like how do I get to make an inscription even. But then you get websites that just let you hit a button and it just does it for you. And then you have a whole cottage industry that stands up around it to like expedite and white glove and move these things through. And that's when the trade's closed, right? When everyone is just talking about this and kind of like tacking it on, you get this a point of like the marginal and creative value that you can do if everyone's doing the same thing. It commoditizes the marketing strategy, and so it gets muted, and you probably maybe have some people mismanage it. Maybe some stuff goes upside down. Those are obvious tops, right? If you have like smaller operations that are just kind of just saying we're buying Bitcoin and then like nothing's really happening and it all kind of like dilutes out, or it's a really small company just trying to like dump shares on shareholders like as a exit liquidity strategy with no long-term vision. I think that's when you see the commodification of that. I don't think you're going to see it as much on the nation state side just because governments move slower. You maybe have like two or three. I saw Russia standing up a crypto exchange, right? Like that's going to be interesting. I'm keeping an eye out on mining too, just the mining ecosystem with Taiwan and just understanding with chips and fabrications. Like, does that also impact just kind of like market dynamics too? But these corporate adoption companies are buying more Bitcoin than the miners are printing out. So the marginal Bitcoin right now are being sold are from long-term holders or people that are trading. So just keeping an eye on all of that. But I think the commodification of the corporate adoption strategy, where everyone in every single publicly traded company is starting to do that, that's a cycle top.
Well, the supply shock is coming. Rob Hamilton of AnchorWatch, thank you for joining us. And please do join us. Go to blockworks.co. Permissionless in Brooklyn, New York. This June the 24th to the 26th, we'll be bringing a Bitcoin conversation to the largest crypto developer conference of the year. I'll be there, as well as special guests to be announced. Stay tuned. And once again, go to blockworks.co if you want to follow along as we get ready for Permissionless. Once again, this has been Rob Hamilton. You can go to AnchorWatch and find out more about his product. This has been Supply Shock, a Blockworks podcast.